I got rejected twice to invest in a product because of my ticket size.
This is the story about how an investment rejection turned into a fintech opportunity in the MENA region. Meet Ziad Mabsout, CEO at Vennre. He is building Sharia-Compliant platforms for Henrys, high earners not rich yet, filling the gap where traditional wealth management fails growing professionals. We break down the Vennre market opportunity, Sharia-Compliant product design, and why team building is harder than fundraising.
The fund manager rejected me. He said, no, you cannot get in. There is a minimum requirement. And is this for big boys? And I'm not part of this club. Henrys are underserved from perspective of wealth management. Wealth management has been his privilege for the high net worth individuals, while Henrys lack access. We are building driven by this purpose. We facilitate Sharia-compliant platform to local investment opportunities rather than global investment opportunities. So we are so persistent, so consistent to solve this problem. Either we buy them or they buy us. Who knows what the future and the growth will be?
Hi, Ziad. Welcome to the show. This is going to be a very interesting conversation. We are talking about the MENA region that it's growing, and we are also talking about the generation or the cohort that we call the Henrys, right?
Correct.
Many times we focus on the underbanked in this pod, but the Henrys are also underserved.
Actually, very true description. I believe the underbanked globally is a segment that has been widely approached to really solve their access. And due to technology, solutions were built to allow the underbanked to be able to be banked, whether back in the time when wallets started on an SMS basis, and then they developed to be in-app wallets or different type of payment solutions. But yeah, Henrys are a segment in the especially in the emerging markets that are underserved. What do we mean by underserved? Henrys, as an quick introductions, high earners not rich yet. Those are professionals, consultants, engineers, tech people. They could be entrepreneurs as well. They have very solid career. They could be a second generation from a family business, or as well as startup founders post their Series A. And they are banked. They have bank accounts. They have access to banking solution, but they are underserved from perspective of wealth management. So wealth management has been historic service or privilege for the high net worth individuals and ultra high net worth individuals. And the typical wealth managers are usually associated with private banking. Private banks, the Swiss private banks of the world and the private banks offer wealth management services to a specific segment of the individuals that call them high net worth individuals, ultra high net worth individuals, and upper tier that have huge financial capabilities that makes it efficient for a private bank to appoint a banker and an investment counselor to service those individuals. What they do is they do for them investment planning, they do for them assessment for opportunities, and they help them get exposure and build portfolios of investments. That has been the historic segment of private banking. While Henrys, high earners not rich yet, those are individuals who are growing in their career. They started saving, but they are not served from wealth management perspective, and they lack access as well to suitable and curated and vetted opportunities. And they could have had access to public markets through different platforms, but instead of helping them, we've given them the tool to make decision, to own their investment decision. That's great, but as well on the private market, they lack access. And what they lack is really access to curated and vetted opportunities that works well for their portfolio and that are suitable. And the decisions of the investments should be associated to a wealth management plan. So this is exactly what do we mean by underserved. And having an underserved Henrys is something actually critical, because in society, especially in emerging markets, Henrys, if one associate them to middle class or growing middle class, they play an essential role in their society because they are the right bridge between the rich and the more underprivileged. There is a serious interest for them to grow and be empowered financially and be empowered by having financial freedom, because their financial freedom will really unlock their potential to contribute in different sectors. So yeah, this is how we look at underserved.
Love it, because then I think the last 2 points that you just touched are very important. One, it's like these customers, they are not rich. They are not, they don't fall within the wealthy private wealth population, but they are starting to accumulate money. And then you used a word that many of us aspired, that it's financial freedom.
Absolutely.
We this generation or this cohort of customers, many of them like have very demanding jobs. And then everybody's in the rat wheel a little bit. And it's hey, when it is going to end, everybody wants financial freedom, but we don't get there. So
absolutely.
And you're right that it's like, if we empower this generation to reach financial freedom, then everybody can focus on doing what they're passionate about, what they love, like focusing on building something good for the world rather than just doing work.
Absolutely. I think we were once asked a question, how do you define someone rich? And actually, the answer is not like as well. We don't answer like private banks. Financial freedom is relative. Your criteria of financial freedom could be different than mine. But what is critical, that you are empowered to be on that path. And it's not going to be an immediate. Getting to financial freedom is a journey that requires the right relationship with money. What do I mean by this? Relationship with money is divided into 3 main pillars: from spending, saving, and then investing. So in each pillar in the journey of your relationship, in your wealth journey, you have to come across the spending decisions, saving behavior, and then investment behavior. And it's very critical as a Henry to build healthy relationship with money, where you know which category you fit in, and you know your spending behavior and saving behavior and eventually investment behavior is servicing which purpose. So that goes into the idea of as well building a behavior of disciplined investments. That goes into building a behavior of not really getting super excited about certain deals because we are a customer of this company or a startup. So we get super excited and want to put more money, which is good. But as if you are giving a Ferrari for someone who's still beginner in driving. So you need for them a co-pilot. And this is the role of a wealth advisor. And actually, us as founders, Anas Al-Halabi, Abdurrahman Al-Malik, my 2 co-founders, and myself, we belong to this category of the society at the Henrys. And we know the pain because we were investment professionals. We've seen how does investment work for the ultra high net worth individuals, family offices, institutional investors. And we wanted to bring and bridge this to Henrys through our offering through a mobile app, because Henrys as well, they are very busy people. They work very long hours. They could be doing very well in their job, but not necessarily we should expect from them that they have the right behavior or they miss what the tools to make the right investment decision that is suitable for them.
Yes. And I think just like you said, that you fit in that category. I think many of people listening will fit in that category too. I personally, sometimes I feel like, oh my God, I'm working in this fintech industry, but my finances, like my financial freedom plan is not where I want it to be. And at the same time, it's like, I do lack the knowledge, lack the tools. So it is important to also cater for this segment as such.
Absolutely. And this is what we're trying to do, build a solution along the Henrys and receive feedback from them to really develop it in a way that is user-driven rather than a parachuting solution. And I think as well, there is a caveat for emerging markets or economies or regions like the MENA region. Because with the Henry's mentality, they could be worried about geopolitical risk, where their investments are, and they could be worried about different type of issues, currency fluctuation, or different kind of exposure. So I think this is an approach that we have been focused on, and we are building driven by this purpose, and we're enjoying this. And whenever we bring something that is exciting, attractive, difficult to get in for a Henry, but as well we try to protect them, it gives us a great sense of accomplishment. One story to share it that we've just so I'm saying I don't know when this will be published, but by the time it would be published, would be we've had our first venture capital co-investment opportunity. And that's a very exciting asset class. We started with real estate, we added private equity secondaries, and then we've started with the venture capital co-investment. And in co-investments, you have higher risk because you are not into a fund. A fund, usually it's a combination of different opportunities that you put them in one basket. And when you are exposed $1 to that basket, your risk is diversified and your returns are diversified. When you do co-investment, as if you picked one item from that basket and you decided to double down and put additional dollar. And that's usually more risky. It could be more rewarding, but it is actually more risky. So when we wanted to launch that opportunity, and I don't know, we might be among the first to do this. I haven't done my research, but we've put a cap of how much an investor can put in terms of dollars per subscription, while other platforms could be pushing people to just put higher. That was exactly the philosophy. We're giving you Ferrari. We need to sit with you and make sure you have the co-pilot, and you are a product expert, and building sometimes a cap for an investment platform could be counterintuitive, but actually this is an example how we are developing the platform.
I like that because this is an example of how you said we're protecting customers as well. So it's protecting ourselves from our own greed or misunderstanding.
Absolutely.
I want to go back a little bit. You are from Lebanon and you've lived in the West as well, right? So you have the global holistic perspective. What differences have you seen when it comes to Henry's in, let's say, the Western markets and MENA region?
Very interesting. Actually, so grew up in Lebanon, as you said, and studied in the UK, then back to Lebanon to develop my career. Then back to London to build Vennre and set it up. The Henry segment as a segment globally is a very interesting segment, and there is more focus nowadays on this segment, whether from whatever you define them. In the US, they could define them Henrys, they could define them retail investors. In UK, they define them Henrys. In the region, we've been pioneering this terminology and pushing for it to distinguish this segment in the market. One of the most critical differentiator between a Henry in the region and a Henry in the Western world, that we don't have a very developed pension system in the MENA region. And as well, we're trying now to simplify the description about the MENA region, but the MENA region really is a combination of different regions. It's Levant, which is Lebanon, Palestine, Syria, and Jordan. And you have the GCC, Gulf Countries Council, and you have the North African countries like Egypt, Algeria, Morocco. So the MENA region could as well, for some people, include Turkey and other geography. But the MENA region, I'm focused more GCC now and those geographies in the description. You don't have a very established pension system. So basically a Henry, if they are having a great lifestyle in the UAE or in Riyadh or in Saudi Arabia, but the moment they leave their job, their lifestyle will be impacted. They could be doing very well in terms of income, but that income is covering for their lifestyle. Their challenge that can they sustain the same lifestyle when they retire? And the simple answer, as you said, is no.
No.
And you are from Mexico originally, yes. And probably you can connect as well, and you can share more about the Henrys in Mexico. But while Henrys in the Western world, mainly Europe, have access to a minimal pension coverage, and certain countries proper health coverage and education. So that bit relieved the stress for Henrys in those markets than in the MENA region. While as well, Henry's in Europe, and like speaking about UK more specifically, who could generate six-figure incomes, not necessarily they could afford the house. And that wasn't the case before. That's something, it's a topic that has been popping up, and it's an indicator. Henry, by definition, should be able to afford a property to live in, to feel comfortable that they are living somewhere that they own, or it's safe, or they have a plan to own it on the long term, and eventually allow them to push for their pension and contribute to their pension and contribute to an investment plan that will cover for their future education, the plan of their kids, for different milestones. While in the US as well, the economy and the market is more entrepreneur. So Henry's in the US, you could find more entrepreneurs. That could be associated more to accredited investors based on the definition there. They do have this offering, and they have the independent financial advisors that try to service this segment, the doctors, consultants, engineers, and so on. As well, there has been investment platforms that are growing very fast because there is this culture of owning your decision making on investments, and that you want to rely on yourself, not to rely on the government for the budget. So those are kind of a bit of differences between we took the MENA, Europe, UK was more focused on US. Would be eager to hear about Henry's in Mexico.
I think,
or in Mexico.
Yeah, I think it's the emerging market theme. Because then if I think about Mexico, I think about Thailand. For example, in Thailand, there is not a government pension system. In Malaysia, in Thailand, there's not. So there's this pressure for customers to basically be savvy when it comes to their investments, because they know that the government will not have their backs as well. In Mexico, I think, and I haven't lived in the country for almost 20 years, but also that's one of the reasons, right? That it's like, well, maybe not, but it's Mexico. I believe there's a large Henry population, but the same pain point that you mentioned, it's like they are living the lifestyle now, and the kids and the travel to Europe and like the big job, all that stuff. But can they maintain that lifestyle when at retirement? Probably no. However, the difference that I see in Mexico as a market is there's a financial instrument that this instrument doesn't apply across the world. In the UK, we don't have that, but it is like pension insurance. It's not a life insurance. It is like a pension insurance. You're saving. It's like a savings plan. You cannot access this money until you're 65. And then sometimes you get like the big lump, or they give you a monthly allowance till you die. So a lot of people in Mexico started relying on those, we call them insurance.
Yeah. Interesting. Very interesting. Yeah. And based on my research as well, and my humble understanding as well, Henry's as well in the Asian market are different. So you have a growing segment in Indonesia of Henry's, but as well the Asian market is different. So going back to as well, or building on this, underserved. So they are underserved from wealth management perspective, access to specific type of opportunities, and usually the private market is harder to access than public market. And imagine as well if you have not the restrictions, requirements like Sharia compliance. So that makes it another element that you need to take care of it. And speaking about Sharia compliance, what is important for many Henrys is to invest as well with purpose.
Yes.
And if we look at the younger Henry segment, who are the Gen Z that are going to be Henrys in a couple of years, there are actually more and more findings about how they make their decisions. And purpose is something critical. And Sharia compliance is actually an extension or more restricted scope from ethical investments or investments that do respect certain values. So that makes it more complex for Henrys.
Can you add, for anyone that is not familiar, with the term. Can you add what do we mean with Sharia compliant, and not just on the regulatory side of Sharia
Yeah,
compliant, but even like the feeling behind Sharia? Because, for example, in Malaysia, many non-Muslims do prefer to go for Sharia compliant products.
interesting. Yeah, I have two simple explanations. One, actually, I have one simple explanation. One, it's like you are eating halal meat, but there is a shop that has a great burger, and you don't necessarily follow the practice, but the meat is great there. So you go and eat the burger, and you have the steak, and you enjoy it. So actually, Sharia compliance investment is driven by the Muslim uh, religion and a practice to invest in certain allowable instruments or certain allowable investments. So, as an example, gambling, if you have a real estate property that is leased for a gambling business, this is not Sharia compliant because the underlying activity is not aligned with the Sharia activities. And then if you generate income from that, that wouldn't be a Sharia compliant investment. Gambling, alcohol, you can go even to weapons because it could be used to harm people, and so many other sectors that does not fulfill the Sharia compliance or the recommended and allowable investment product. On the other side, more complex is the principle of Sharia investment is driven by making the money work to create jobs and to be circulating in the economy rather than parking the money and generating interest. That's why interest is not a halal income. So, sorry, you had something.
Yeah, and like that is a very large distinction, because like even though it's an investment and you're growing your money, it is like you're growing your money in a way that it is helping society.
Absolutely. So the foundational philosophy or the background of the Sharia or Islamic finance is that the money is used to be circulating in the economy and to be invested. And once it is used for that purpose, it will create jobs, it will impact, it will build solutions, it will back businesses that are serving the society. That's a great distinguisher instead of making individuals parking their money in fixed income product. So mainly, but at the same time, Islamic finance got developed. You have not an equivalent fixed income, but you have what the Sharia compliant fixed income product called sukuk, where I can finance a business, protect myself as an investor on a basis that I as well share the profit and the loss. So there is nothing called guaranteed return in Sharia compliant investment. So going back to our platform, our values follow the Sharia compliance and we follow the Sharia compliance requirements for an investment. So we have a Sharia board that reviewed the underlying activities of the opportunities of the investments and that ensure that the investments are structured in the right way where it fulfills the standard of a Sharia investment. So if you are looking at the real estate, usually it's the simplest. Venture capital, it's very simple. Private equity buyouts are usually more complex to really, because buyout is all about leverage and excessive leverage does not go well with the Sharia compliant investment. So this is a kind of a simplified background.
Yeah, exactly. It's the simplified version. You also incorporated zakat into the proposition, right?
Very interesting. So yeah, once you wanna serve this segment of the market, you have to think of what they will come across and they need to resolve as well. Again, as Henry's. So zakat is a requirement in Islam to be the standard rule is at 2.5%. It's like a tax on your money to make sure you share what you were granted with other people who are underprivileged. So some investments are exposed to zakat. So we facilitate doing the zakat calculation. And we were developing as well a feature in app where you can calculate your zakat to make sure that you are as well abiding by the requirements. So being a Sharia compliant platform is not just about the product being compliant, but it's about as well the journey. So you think of the journey of the user, and when Ramadan comes and people mostly think about zakat and they need to calculate it, we need to facilitate this for them because we have the information about the opportunities, we have the underlying activities, the net income, and so on. So we can facilitate this.
I love that. And I'm going to step back a little bit. And I'll do two questions in one. One is,
It's an Arabic word.
what made you guys like start the company? Then at the same time, it's like, what makes you, because like now while the MENA region is growing a lot, there's also other, like Sharia compliant companies in the region.
Absolutely.
So what makes you different in the region? What makes your approach different? Kind of like 2-in-1, but I think that gives us to talk.
Look, the first question is a simple story. I knew Anas Halabi, our co-founder, and he's currently the CIO for more than 5-6 years. And he was an investment manager for a single family office. And I always connected with Anas on a personal level and as well on opportunities level. We used to share notes, share opportunities, discuss them. When you are on the buy side, so the segment we call either you are on the sell side, like you are a banker, you are selling a product or selling an opportunity, or you are on the buy side, means you are on the investment side. When you are on the investment side, like a family office or institutional investor, usually you would find a lot of people trying to sell you product. So you would like to connect with other peers that you can be open, discuss with them, reflect on opportunities. And even sometimes we didn't know we were competing against each other on opportunities in London or in the US. So Anas, I knew him for a good 5-6 years. It was an opportunity while he was in transition from one job to another. As well, I saw a gap in the market. I got rejected twice to invest in a product that I presented to the family office because of my ticket size. So I wanted to give $50,000. That's what I had as a saving for an opportunity. The family office subscribed to $3 million. And actually the fund manager rejected me. He said, no, you cannot get in. There is a minimum requirement. And that was like, what are you trying to tell me? Is this for big boys? And I'm not part of this club, but I was behind the work done, presented to the investment committee. And to be very frank with you, that really triggered something in my mind. And I connected to Anas. I told him, look, we've had this issue. And what do people like us do if they are not rich yet, but they are growing and they really want to have a sustainable lifestyle and they want to have financial freedom? I would like to reach a point where we own our time. We decide what we'd like to do. Then we dig deeper into that topic and we did our research. And then we decided, you know what, let's do it. Let us build the solution because we belong to this segment and we believe in it. We believe in our mission and let's do it. We've looked around us. There are many Henrys and we've assessed the market size because we are investment professionals. So we did the boring style investment assessment, market sizing. Okay, numbers make sense. If we take this percentage of the market, we're building a solid business. That trend is happening in the US. Why not build it in the MENA region and grow? Going back to your question, there are other platforms. Definitely there are other platforms. And this makes us comfortable actually and makes us happy. It doesn't make us like feeling like why there is someone else doing something, addressing a solution or building a solution. But I think the biggest differentiator is how you design the solution. The biggest differentiator is as well the team that you have, you are building and you are attracting. And that team, their combination together, what can they do together? And that eventually will result in what kind of product you will offer, how you will address the problems, how you will address. So the scene is not static. The scene is moving scene. So this word is a moving word. You need really to understand what's going on with the Henrys living the. So for example, one of the biggest differentiator between us and another platform, that platform is coming from family office background and trying to serve the Henrys. but they come from different
Yeah.
DNA. No, we are Henrys. We speak their language.
Yes.
We go to the same vacation places that we can afford. We have very similar lifestyle. So our chances of speaking their language, using the right communication, is much stronger. So we're very comfortable that I'm not going after family office. We're not going after family office. Don't come after Henrys. But other platforms that are trying to solve for Henrys as well, they are, even if they have done it Sharia compliance, for example, in the MENA region, more offering to local investment opportunities rather than global investment opportunities. While we've started with a global, bringing it to the MENA region, Sharia compliant. So that's a differentiator. And you have other platforms that could be trying to do the same. Again, I think the team, the background of the team, the combination of the team, and what it can result in terms of an approach to building that solution. We have extensive experience on the investment side. Other startups don't have that experience. Other startups have a sell side experience. And we brought knowledge from top tech and the product, and that's key for us. So I think the approach, honestly.
Yeah, you touch. I love the topic of people as such, people and culture. How have you built? What are your principles that you've used to build the team, such that, like you say, it's like you bring these people together, and then your job is to ensure that they work well together to build something magic.
So first of all,
Like,
a disclaimer. I think in a journey of a founder, the most difficult thing is building a team, not fundraising. That's my learnings, and that's our learnings as well as founders, and myself, Anas, and Abdurrahman. The hardest thing is building a team and attracting the right talent. It's much harder than fundraising. And this is one. The second point is as well, it is harder at earlier stage when you are an idea, when you are like, two people, and the pitch deck is much harder when you have a business, when you have a revenue, when you are scaling up, and so on. But the most critical things, first of all, we look at values. What kind of values? We have one of our backer always uses the terminology of the good people. They have to be good people. And the definition of good people is not subjective, actually. It's very objective. A good person means they have certain values, they have work ethics, they have commitment. This is what good people. The second point is attitude. Attitude is very critical because it's very stressful. A startup journey is very stressful. So if someone has bad attitude, save it for themselves. We don't need them on the team, even if they are the geek of their field. Because I'm sure this is a 7 billion population world. I'm sure there is someone else that could have the compatible skills, technical skills, but as well with a better attitude. Good people, attitude. And the third thing is conviction about the business. Do they really believe in what they are contributing to or not? If they don't believe, whatever you do, you won't be able to motivate them to solve a problem, even if they went to their weekend and there is a problem that they face during the week. If they don't believe in the business, they will not touch it or think about it. But you have people who are on a Slack active because they really believe in the business. They are literally like, we have a gentleman, his name is Adam, on customer support. Sometimes we think that he's a bot, but he's not a bot,
always not.
Yeah, he's always available. But this guy is 22 years old, hungry to grow. He believes in the business and he's giving it all. And I think those are, if you find the good and the attitude and the conviction, plus definitely the technical requirements, you have an amazing formula. This is on individual level. On the team level, it gets complex because you have to have the right mix. Then you need to manage. So you want to make sure there is no sense of competition. There is no sense of negative culture. There is no sense of backstabbing. There is no sense of throwing people under the bus. And there is no sense of, as well, ego, like, people not open for feedback. So that combination is important. And it works by iteration, in, out, until you have the best mix. And I've learned something from a startup founder, and I really like it. If you have the requirements, hire fast. And if the combination doesn't work, fire fast. Because you do not afford as a startup very low. You are not like a corporate. You are not like a established business. So you have to really make the call earlier rather than later if you are not seeing it happening. But I think that's very interesting journey, because by the end of the day, you're dealing with the humans that have their own issues in their personal life, that they have their own ambition, that they have as well their own aspiration. So it's an amazing learning experience, actually.
Yes, definitely. What's the biggest lesson? Because given that it's been a learning experience, I know it's been a learning experience, but I'm assuming at the same time it's been a humbling experience. There's been a ton of failure. There's been moments that you're like, oh my God, and I want to continue. What can you tell us about that?
Look, definitely, as it was a learning, it's always humbling. And if I am allowed to share any piece of advice with any young entrepreneurs or people who would like to build a business, really being humble is very critical. Being open to learning, being open to feedback, being open, really hearing feedback. Again, sometimes you spend 1 hour hearing feedback, 95% doesn't really, you know it or something, you know, but there is a 5%, a word someone could say, one word that you're like, oh my God, I didn't think about this. So we've spent 100 of hours, me and the co-founders, meeting with people, sitting with people, and we still do this. And even how we build the cap table of individuals that have expertise that we don't have. So definitely humbling, open to learning. I'm an investment professional, never understood technology and the product. So that I got exposed to product. Now I admire the product topic. I admire it. I go and play around with Figma and try to, because what an amazing field. Like, you literally develop the whole user experience.
Yes.
So what an amazing, like what a business contributor you are. So it's learning, humbling. In terms of failures, definitely we failed in certain things. Definitely we've had the targets. Sometimes we don't meet them. You don't meet your targets 100%. Do we say like, I wish I wasn't here, or like, let's stop? No, to be honest, no. Because for different reasons, not because like we are Iron Man. No, because first of all, as founders, our average age is around 38 to 40. So we came to that decision, not calculated, but like we've had our foundation and we know exactly the risk we are exposed to. And we've aligned our families as well, our partners into this. And this is very critical. Align your partner, your wife, make sure she's on board. If she's not on board, every day you go back home and you have an issue,
You
she
have
can tell, I
yes.
told you this is not the right. So have the support of family, have the support of friends. And if you have the combination of the persistence and consistency that you want to succeed and you want to solve it as well, you are open for feedback. That means you can iterate quickly. That means if you've failed in an aspect, you go back, you learn, you try again. You go back, you learn, try again. That's a consistency matter. And for us, we're still up for this challenge, and we still believe in the business, and our ambitions are so high. We say there is a player in the European market, I'm not going to mention the name, that have been in the market since 2017. And people try to tell us, yeah, you are this company of Middle East. I say that's a simplified way for you to say. But the future of this, either we buy them or they buy us. Some people they have that face. Yeah, but they are 3 billion, you are still 25 million. I say, yeah, that's fine. But who knows what the future and the growth will be? Okay, so we are so persistent, so consistent to solve this problem. We admire the Henry segment, and I truly and genuinely saying our thoughts and how we look at Henry segment, and that's very powerful. And we belong to this segment. We invest our own money in those deals, and we are so confident that we will be building the solution that will be used by Henrys for them to achieve financial freedom and wealth creation. What we will do, how we will iterate, what features we will add, that's a different conversation. We will test different features. Some of them will fail, some of them will succeed, but that's what we are doing. And we are persistent within our values and within what we believe is suitable and how we would like to spend the rest of our career doing what.
I love the conviction. And probably that's like a beautiful way to wrap up. To just like put it like all very nicely together towards the end.
Thank you, Monica. I really appreciate the opportunity to be with you. And as we said, keen to have an offline conversation on a product more.
Yes, we'll do.
Thank you very much.
Thank you. Thank you, everyone. See you next week.
Thank
Ciao, ciao.